Hi everyone, I have a surprise for you in this video because not only are we going to go through the high time frame, medium time frame and the low time frame bullish and bearish scenarios, I'm also going to show you how one could trade those scenarios based on purely Elliott Wave knowledge. Of course, only educational, no financial advice, but I hope you learn how one can trade using Elliott Waves with all the invalidations and everything that is included in certain scenarios. So let's start. If this is the high time frame bullish scenario, I'm looking for this ABC, where C is then still unfinished, as we are then in this 5-wave impulse, where currently I would be looking for us to be inside a wave 4, which is then a longer corrective wave, and I'll show you on the medium time frame where I think where we are. Now the invalidation is taking this low at about 20.3k, as wave 4 tends not to go below the 0.5 with high time frame candles, else this might very easily become a 1, a 2, and then eventually a 3 for way more upside. Now I think it would be nice that wave 5 C and B end over here in the common wave C target, or at least the rare wave C target. Also because over here we had great support over the years, and this can now be great resistance for further downside. If we look at how one could possibly trade this, then you see the two trades on the chart right now. So what I think is interesting, now we need a lot more information for a wave 4, so the moment we would go down here right now, this might not be interesting to me, but you could think, hey, we have a couple of lows over here, the invalidation is down here, a little bit of leeway always within invalidation, and then eventually trade it up to the upside at about 30k. That would give us about a 6, like 1 to 6 type of trade, and then eventually once you want to go to the downside based on this scenario, then over here at about 30k, the 3A2, which is a minimum requirement for a wave B, as this is if this is a red A then a red B, the red B should actually hit as a minimum target the 3A2, which I have on my chart. That's the reason why this trade would then kind of start at the 3A2. Again, the invalidation would be actually to go above the 1.618 over here, because the C target, maximum target, is the 1.618 in this scenario. So that's why the stop loss would be there. And also it's of course far above the resistance area that we have. So that would then be a trade to the downside, which is now about a 1 to 2.5. But of course we don't know how deep this trade might go, but that is based on the information we can only get at that moment in time. So then let's go to the bearish scenario. The bearish scenario for me in this case is that this impulse is already finished. Wave 5 is in, C is in, and therefore the red B is in as well. And we would move to the downside to much lower prices of at least 15.5k, if not much deeper. The invalidation is taking the high over here. I don't necessarily like this scenario. Why? Because we didn't hit the common target or the rare wave C target, but it did hit the requirement of at least taking the highs of wave A. Now, if we then go to the medium time frame scenario, and this is then the bullish scenario over here, I'm looking for currently a 3-wave in this wave Z. So if this is an impulse to the downside, basically a 1, 2, 3, and then you have a 4 over here and a 5, then this fifth wave would end very nicely inside, or at least that's the idea at the moment, would end somewhere nicely at this target box where we have some confluences like a daily naked point of control. We have a daily and a weekly here as well. So a nice little bit of confluence as well. Besides that, we also have the target area for a wave Z, which is the 1-to-1 and the 1.236 trend-based fib extension taken from the high of 3 to the low of W to the high of X. With eventually the invalidation of Z taking the high of X. In this scenario, I think that we would be looking then for a little bit of a wave up, then a wave down, up again, and then this is an A B, and then a C in a zigzag. So that's a 5-wave structure, then a 3-wave move up for then another 5-wave structure to the downside. And then this could be the end of wave 4, or what can also happen is that this whole thing is only going to be a W, and then we have another X up, another Y down, and then that is the end of wave 4. Now, on the medium time frame, one could possibly trade it like this based on Elliott Wave knowledge, of course educational, no advice, where we don't yet know where the low of 5 is gonna be in, right? This is purely an estimation. We need way more price action to really get a grasp of where wave 5 might end. Maybe it's gonna end down here, we just don't know yet. But in this scenario, the entry could be just above the weekly and the daily over here, or right at basically, as well as the daily naked point of control that we have. I would like that to hit. The invalidation of this long would for me now being taking that low down there, and also it's below the target area for a wave Z, so that's you know, just playing it safe. And then one could trade it up to, I have a daily up there as well, so there's a daily over here, there's a couple of highs, the 786, so that could be a nice target. And then of course, based on Elliott Wave knowledge, if this is going to be an ABC, then one can trade it to the downside again, with obviously the invalidation being the stop loss level and then moving to the downside. So that could be a nice scenario. And then the bearish scenario on this time frame is the following, where if this wave C is already in and this wave B as well, we're going down in a leading diagonal. So that's a 3 wave in 1, 3 wave in 2, 3 wave in 3, 3 waves in 4, and then eventually a 3 wave in the 5, before then moving up for a wave 2, and then move to much lower prices to at least 15.5K. Then on the lower time frame, these are the scenarios that I want to show you. I have a bullish and a bearish scenario. This is the more bullish one because this one has to do with wave Z and therefore the potential ending of the wave 4 before then more upside, where this is a 1, 2, 3, 4, 5, and that could then be the A, the yellow count. So that is then an A, a B, and eventually a C and Z. The reason why for this wave 4, which is hidden behind the line, the reason why for this wave 4 I also put the CC, the golden pocket here on the chart, is because wave 2 was very shallow and very short. And the rule of alternation says that if wave 2 is very shallow and short, then wave 4 in this case can be a bit longer, but also it can be quite high in comparison to a wave 2. Wave 2 only hit the 382, while usually you would expect a golden pocket at like the 618, for example. But in this case, even though a wave 4 tends not to go below the 0.5, or in this case above the 0.5, I still put the golden pocket on the chart just in case. And for the bullish scenario, of course, again, play defensively. It's putting the stop loss above the golden pocket, and over here we have the low of Y, which I think would be quite a nice target in between this target area as well. Other than that, the reason that, you know, this is actually quite risky is because we have no structure here whatsoever. This is completely like blank. So of course, if price moves to the upside, it can do so possibly very quick. But that's why the stop loss is safe, better safe than sorry. And then eventually, if this is wave 4 and we move down to 5, then this is basically the same trade as on the medium time frame, where eventually we trade wave B to the upside. But of course, again, we need more price action to even know where the low of 5 is going to be. The bearish scenario in this case is the scenario basically the same as the medium time frame, where we have wave 1, 2, eventually 3, which then is another ABC, and then a 4, 5 before then a bigger time frame, higher time frame, wave 2, which I just showed, this being a 1, 2, and then much lower prices. So yeah, hopefully you like this type of video where I'm going to show you how one can trade possibly Elliott Wave counts based on the knowledge that hopefully you learn as well by watching these videos. I try to make it as insightful as possible. There's no financial advice. This is purely educational. I like to repeat that because it helps you hopefully to get an idea of how can someone trade Elliott Waves if your strategy is purely based on Elliott Waves. Now, my strategies that I have go much further than just Elliott Waves, but I hope that with everything I'm showing you that you can get an idea of, hey, this might be an invalidation. He is waiting for more price action. He's waiting for more insights. He's entering here because, hey, there's some confluence. Like, hopefully those are the type of things that you're going to think of when eventually you're going to combine Elliott Waves with other knowledge that you have in the market. So that being said, I'd like to thank you for watching this video. Let me know in the comments what you think of this video. I would love to know and get your feedback. Thanks for watching this video. I hope you have a great evening this Saturday or morning or afternoon, wherever you are from the world. And I hope to see you at the next one tomorrow morning at 7 a.m. Central East European time. Bye-bye.